Good morning, good afternoon, or good evening to everyone in our audience, wherever you are in the world, and Ramadan Kareem to all of you who are observing the holy month. I'm Doug Silliman, the president of the Arab Gulf States Institute in Washington, and it is my pleasure to welcome you to today's program, Building a Legacy, How Qatar is Leveraging the 2022 World Cup to Build a More Diversified Economy. Let me introduce our very good panelists for today in the discussion of Qatar's economy. First, we have Dr. Ranbi, the Deputy Division Chief for the IMF's GCC Division and the Mission Chief for Qatar. She joined the IMF in 2007 and has covered a variety of economies in Europe, South Asia, and East Asia for the IMF. She holds a PhD in economics from the University of Maryland in College Park, Maryland, here in the suburbs of Washington, D.C. Ran, welcome. We're very happy to have you with us. We also have Dr. Ziad Daoud, the Chief Emerging Markets Economist for Bloomberg Economics. Prior to joining Bloomberg, he was the head economist at QNB Group and an economist at the Fulcrum Asset Management Group. He holds a PhD in economics from the London School of Economics. Ziad, thank you for coming back and being with us at AGSIW today. Moderating our panel today is Mr. Tim Callen, a visiting fellow at AGSIW. Before coming to work with us at AGSIW, he was the Assistant Director for the IMF's Middle East and Central Asia Department, Mission Chief for Saudi Arabia, and Chief of the GCC Division. He holds a Master's in Economics from the University of Warwick. Tim, I will hand you the virtual microphone.
Good. Thank you very much, Ambassador. Let me add my welcome to everybody joining us and thank Ran and Ziad for agreeing to participate in this event. So we're going to discuss the IMF's recently published Article 4 report for Qatar, published I think the beginning of February and available on the IMF's website. How we're going to run is Ran is going to give us a quick overview of the key takeaways from the report, and then Ziad is going to make comments following on from Ran. We'll then go to Q&A. As the Ambassador said, if you could please submit your questions through the Q&A function. Please do so as soon as possible. They're much more likely to get asked if they're put in early than if they're put in 5 minutes before we're going to end. So please use that. And then without further ado, I'm going to hand the mic over to Ran to talk us through the IMF's main conclusions and policy prescriptions for Qatar. Thank you, Ran.
Thank you so much, Tim. Thank you, Ambassador. And thanks, everyone, for joining this event virtually. And Ramadan Kareem to those from the region or elsewhere who are observing Ramadan. So just give me 1 minute. Let me quickly load the presentation I have on the key findings of the. Okay, I hope you can see my presentation here. Okay, great, thank you. So I'll spend about 15-20 minutes to go through the key findings of the latest report, with the emphasis on how Qatar can leverage the success of the 2022 World Cup to build a more diversified economy. So as we all know, the World Cup was quite a success and has boosted 2022, which grew by 20% year on year in the last quarter of 2022. And therefore, the overall growth in 2022 was very strong, with also some positive spillovers to the region because quite a number of spectators also stayed in other GCC countries and in particular in the UAE, in Dubai. So it was a very positive event in terms of the economic growth. But then one might still have the question, after all, it was a 1-month event with all the boost to growth, but then it was a one-off. Then the question is it really worth all the investment over the last decade, reportedly at between $200 to $300 billion? is the return really worth it? So let me start by not by providing an answer, but just to shed some lights on what are the lasting legacies from that 1 month event. So the first thing I want to highlight is that indeed there was a massive public investment program over the last decade. But if we look at sort of the composition of that investment, how much of that was for the stadiums? As reportedly, the cost for the stadiums was around $7 billion. So that is a relatively small share of the overall 200 to 300 billion public investment. And then the rest of the investment was mostly on general infrastructure to build roads, metro, port, expand the airport, and so on and so forth. And the general infrastructure is of very high quality and can be leveraged to boost further economic diversification. And if we look beyond just the near term, the 1 month or 1 year boost to growth, if we take a longer perspective, look at what was the contribution from that massive public investment over the last decade to Qatar's non-hydrocarbon GDP growth since 2011. The left side chart shows you pretty much almost all the non-hydrocarbon growth over the last decade was driven almost entirely by public investment. On average, the contribution is between 5 to 6 percentage points, depending on whether you include the pandemic episode or not. But the message is clear. The public investment was a major growth driver over the last decade. That's the long-term growth contribution. In addition to infrastructure, to the boost to growth over the last decade, I want to highlight the second aspect, which is the sort of a set of major structural reforms Qatar has undertaken as part of the preparation work or as their decade-long efforts to diversify the economy with the World Cup as a main anchor. So the middle chart shows the improvement in the number of competitiveness indicators. So not only infrastructure I already talked about, also government efficiency, business efficiency. All these have improved quite a bit, and some of the dimensions even exceed the OECD average. Of course, there are still further scope for improvement, which I will talk later when I get to the structural reform discussions. But the overall picture is that in addition to the public investment, there has been quite some progress in structural reforms as well. And one other major reform I didn't show in the chart, but is very important, is the labor market reform for the expatriate workers, the abolishment of the kafala system, which serves in a major, I think Qatar was the first one in the GCC to abolish the kafala system. So that's really a major step in the right direction. And the final aspect I want to highlight is the boosted global visibility from the event. So here on the right, we have a chart on the visitor arrivals. The first peak there after the pandemic, obviously, is from the World Cup. And after the World Cup, even though the number of arrivals declined for a few months, but in general, they held up pretty well, higher than the pre-pandemic level. And in more recent months, also because of the Asian Cup and other events, major events, you can see that the total visitor arrivals picked up again and even exceeded the peak of the World Cup, which is quite encouraging, showing at least there are some initial, I mean, the time horizon is still quite short, but at least there are some early signs that maybe the World Cup has indeed boosted the visibility of Qatar beyond just that 1 month horizon. So with all these very positive contributions from the legacy of the World Cup, let me quickly go through the economic outlook. So as expected, growth has been normalizing, slowing down somewhat following the World Cup in 2023, and that normalization is expected to continue in 2024. But going forward over the medium term, the growth outlook is much more favorable based on our latest projection, the medium term or the basically average growth from 2026 to 2028 would average around 5.5%. So a large part of that pickup in growth will be driven by the massive ongoing LNG expansion, which we show in the left-hand side chart, is expected to boost Qatar's LNG production by over 60%. I want to note that actually this chart does not reflect the most recent announcement a few weeks ago of the further expansion by 2030. So if we account for that further expansion, then the total LNG production will increase by more than 85%. So that's on the hydrocarbon sector. On the non-hydrocarbon sector as well, I think there's some positive news. Since the publication of the report, or around at the same time, I think, Qatar has launched its third and the final national development strategy to achieve all the goals under Vision 2030. We can talk a little bit more on the national development strategy, but overall, we think though that strategy contains a lot of good reform initiatives, and with the proper and the speedy implementation of the strategy, we also expect some initial gains from that strategy to the non-hydrocarbon growth over the medium term. So that's the outlook. In terms of the risks, risks are broadly balanced, with a lot of the downside risks actually from the external, the global environment. Although soft landing seems to be a more likely scenario now than late last year, so hopefully from the inflation, from monetary policy tightening perspective, maybe that headwind is somewhat better than what we expected earlier. But unfortunately, there are new shocks. We all know the conflict starting in early October, which as of now has not had visible impact on Qatar, but of course it remains a downside risk. And more recently, due to the tensions in the Red Sea, we have seen some very early signs of rerouting of LNG shipment. So we are monitoring that very closely. We still need to see if it's just a delay in the shipment, or there might be more material impact on exports of LNG from Qatar. So that's another major risk we want to monitor from the external environment. Domestically, I just want to highlight one issue, which is the real estate market weaknesses. I show one chart here, but I will have the next slide to delve more into it. But there's also the upside opportunity with the accelerated implementation of the national development strategy, which could boost growth even more than what we projected in the baseline. So now maybe let me talk a little bit about the real estate market. So it's not a new issue. The weaknesses actually is already visible. I went through quickly, but from the previous slide, you can see the real estate price already started to show the weaknesses from 2016. And the revenues of construction companies have weakened, especially for the small firms. And also, if you look at the banking sector's exposure to the real estate sector, in total, real estate and contractor loans account for about 1/5 of the total banking sector assets. So potentially the exposure to that sector is quite sizable. With that said, again, this is not a new issue. So the banks know that they need to provision. They have been quite actively in provisioning on related loans. And also in 2023, quite a number of policy initiatives have been adopted to enhance the data collection transparency. The real estate regulatory authority was established to enhance regulation, and macroprudential measures have been adopted to enhance risk control of banks' exposure to the sector. And a few other initiatives. I wouldn't go into details, but we can discuss later if there's interest. So all these policy measures are very much welcome. And of course, we would recommend their proper implementation and maybe prioritization of measures that will be more impactful and less complicated to ensure that that potential risk is well under control. Now, let me move on to the fiscal policy, which is the main policy lever one of the main policy levers that Qatar has in terms of both managing public finance, but also to help achieve the economic transformation. That's why I think there's really a balancing act between sustained discipline and the aspiration of transformation. Let me start by saying that it's really commendable how Qatar has been able to maintain fiscal prudence over the past few years amid all the hydrocarbon windfalls, the potential spending needs during the World Cup, and so on. Yet Qatar managed to maintain its spending within the overall budget envelope. So that was very encouraging. If we take a longer term perspective and look at progress in terms of fiscal prudence within the GCC, then we can see Qatar is actually the most successful one in terms of containing or reducing its expenditure, public central government expenditure. However, there is gap in terms of diversifying or mobilizing non-hydrocarbon revenues. And in particular, Qatar and Kuwait are the only ones among the GCC countries that have not yet adopted the VAT. So overall, our advice would focus on three main pillars. One is, of course, we call for sustained fiscal prudence going forward. I think that is also the general intention as mentioned in the National Development Strategy. The second pillar really is on revenue diversification, introducing the VAT, maybe broadening the corporate income tax and other potential revenue sources. And the third pillar is on public investment to enhance the efficiency and composition of the public investment. So we know that most of the public investment over the last decade was on infrastructure. And here we have a chart on the public investment efficiency frontier, which shows their scope to further enhance the efficiency of public investment. And also there are other areas like wage bill that can be more rationalized, and then the energy subsidy reforms is another area to enhance the efficiency of current spending. That's on efficiency. Now on composition, I think that's really a very important part, not only for fiscal policy, but to rethink Qatar's growth model. In the past, the growth model was largely driven by the public sector, including SOEs, not just the central government. Going forward, the goal really is to boost more the private sector involvement. So the public sector should be more of an enabler rather than a direct driver of growth. And from that perspective, we think the composition of the public spending should be more, and especially given already very high quality infrastructure. So public spending should support more the structural reforms to enhance productivity, to improve business environment, and so on, to enable the private sector to play a bigger role and to achieve more diversification and, of course, higher growth. So those are the priorities for the fiscal policy. And finally, let me highlight structural reforms, and clearly that will be the main reforms that will drive economic diversification. So here, again, three main priorities we want to highlight. The first one is to boost productivity. I don't have a chart showing here, but in general, the total effective productivity has been on a declining trend in the GCC region, and particularly in Qatar, over the last decade or so. So the number one area really is to boost productivity and also to enhance inclusion of the labor force participation. So more specifically, we would call for attracting more talent, attracting more higher skilled expats, to increase the involvement of Qatari nationals, participation in the private sector, enhance education, increase female labor participation rate. So that's the one main area of productivity. The second one is to improve business environment further, to enhance trade integration within the region with the rest of the world, enhance competition, allow SMEs better access to credit, and open up for competition. The third pillar is to really leverage on the global trend, especially on digitalization and climate actions. So in this slide, I focus mainly on the first two areas I mentioned, and we did some quantitative exercise, but I would say this is more for illustration because as we know, the impact of the reforms could depend on the assumption as to how fast the reforms can be and so on. But still, I think this exercise is useful in pointing out which reforms could be the most impactful. So from the labor market side, clearly attracting more skilled expats would be the most impactful reform. And on the business environment aspect, enhancing access to credit, especially including for SMEs, would be a very impactful reforms. And then I want to highlight another aspect that is, instead of implementing reforms one by one, a comprehensive and well-sequenced package would be more impactful. And what we mean by that is you prioritize the most important reforms, but also exploit complementarities across reforms, because research has shown that if you bundle certain reforms together, so for example, governance, trade, product market reforms together, then the total impact would be much larger than the sum of implementing individual reforms. And also it's important to take into consideration the capacity sort of requirement of reforms. So also not to overburden the capacity. Finally, let me talk a little bit more about digitalization and climate, which are really very important. For many reasons, digitalization, it has really accelerated since the pandemic. And Qatar ranks really well. We constructed this enhanced digital access index. And as you can see, GCC in general is doing very well. It's pretty much on par with advanced economies. And of course, Qatar is doing very well. But if you look at the skills comparison, there, I think there will be more scope for Qatar to especially improve the more advanced ICT skills of its labor force. So it's an opportunity, and there's also scope for further improvement on digitalization as a new source of growth. On climate, it's a big topic, but let me just highlight two things. One is there's a emission reduction target by 25% from the business as usual baseline by 2030 target set by Qatar. To achieve that target, one key issue is to gradually remove energy subsidies, as I mentioned earlier, also as part of the fiscal reforms. But also that effort can be complemented by more investment in renewable energies, which Qatar is already doing and has a target for solar energy. We would recommend to increase the investment in renewables further, and that will not only help with the energy transition, but also to generate quite sizable growth gains, as we show the cumulative non-hydrocarbon output growth. By 2028, the cumulative impact is also quite sizable. So with that, let me stop here and see if there are any questions. Thank you.
Thank you very much, Ran. I'm just going to hand the mic straight over to Ziad to get his views on Ran's thoughts and more broadly on Qatar, and then after that we'll go to Q&A. So Ziad, the floor is yours.
Thank you so much, Tim. Let me just share my slides. Okay, I can speak freely now. Well, thanks to the Arab Gulf States Institute in Washington for inviting me. Thanks, Tim, for organizing this and inviting me to speak here. And thanks, Rand, for an excellent presentation, but also a really good Article 4 report on Qatar. I really enjoyed reading it. So what I want to do is I want to frame my discussion of the report and Rand's presentation around 4 questions. I think these 4 questions are important for Qatar's macroeconomic future, but also they are relevant for other countries in the region, in the GCC, in order to learn from Qatar's experience post World Cup. So I'll present each questions. I will tell you where I think Qatar stands on each of these questions. I'd love to hear your views as well. So what are the 4 questions? The first one is infrastructure. The question is, I think, has Qatar built too much as a result of the World Cup? I think Ran has shown the level of investment spending in Qatar, somewhere between 200 and 300 billion dollars since 2010, ahead of the World Cup. She showed how much that has driven growth. I think any visitor to Qatar can see an upgrade in infrastructure, whether it's road network, whether it's the museums, whether it's the metro, all sorts of things. Even the stadiums are top class. And you can even see it in the numbers. If you look at the infrastructure reports and the rankings, that has definitely improved things. But there is a question mark whether Qatar has basically built too much. And there is probably evidence that it has. If you look at this, for example, what I chart here is I chart the property prices in 4 GCC areas, so Saudi Arabia, Abu Dhabi, Dubai, and Qatar. And I index everything to 100 in the second half of 2020. So there's been a whole boom in the GCC.
Yeah, can I just, I'm not seeing anything on my screen for slides.
Okay. Is this working?
Yes, indeed. Now we're.
Oh my God.
There we
Good,
go.
good.
Sorry,
All
I
right.
think it was my screen that sorry about
It's
that.
all right. No, thank you, Ran. So what I'm plotting here is property prices in 4 GCC country/cities. So you have Dubai, you have Abu Dhabi, you have Saudi, and you have Qatar. And I've indexed everything so that they're all equal to 100 in the second half of 2020. That's when, arguably the GCC had a post-pandemic boom in the GCC. And what you see 2 things, 2 outliers. Dubai is completely booming. Dubai property price is completely booming. Qatar is completely lagging. And that is despite a region-wide boom. That's despite high growth numbers in Qatar that Ran talked about. Real estate prices are basically falling/stable over the last 3 to 4 years. That's an indication of excess supply and extra capacity. If you read the IMF report, there's a whole section on the state of real estate market in Qatar, which also I think indicates that there is excess supply that's to continue to come in the face of weaker demand. And yes, one question is, or not one question, one comment is that Qatar does have the fiscal space. The government has large surpluses and low debt that it can absorb any shocks and losses from the real estate market. But maybe for other countries in the region and beyond that are hosting big tournaments, maybe they don't have that fortune of having that big fiscal buffer to afford what is excess real estate supply in case they host events. And we know, for example, that yes, Qatar hosted the World Cup in 2022, but Saudi Arabia is set to host the World Cup in 2034. And maybe that is a lesson or something to take into account when ahead of building the infrastructure for the World Cup. So my first question is, has Qatar built too much? And what kind of lessons can we learn from that ahead of other countries, hosting big events in the region? The second question is on population. And I think there are 2 views in the GCC. There is a view that you sort of infer from reading Qatar's national development strategy, the third one, the one just been released. And basically the big story here, the big picture, if you look at the big picture, Qatar's population has increased significantly over the last 2 decades. In year 2000, the population was almost 500,000 people. Today, it's over 3 million people. That's a massive expansion in a small period of time. And there are 2 views in the GCC, as I mentioned. If you read the National Development Strategy, the third one, the one's just been published, it doesn't talk about ambitious growth rates in terms of population growth. It talks about sustainable rates for population growth. It talks about the downside of rapid population or too fast population growth in terms of the social cohesion and the social fabric, but also pressure on the infrastructure. And that's actually, I went back and read the National Development Strategy, the second one, the previous one, and these points are also there. So it's not something new. It's actually something that has always been there, that you need population growth to be sustainable and not to grow too rapidly. So that's one view you see in the GCC. The other view is the one you see, for example, in places like Saudi Arabia and Dubai. Saudi Arabia wants to increase its population to 50 to 60 million people by 2030 from currently around 34 million people. That's a massive expansion in a short space of time. Dubai also has ambitious population growth targets. It wants to increase its population by 76% over the next 2 decades. So here you already see two contrasting views with respect to population. One side wants to increase population. Obviously, you can't do it all organically, so most of it will come from attracting expatriates. Another sort of the other side of the spectrum, which is where Qatar is, it's more cautious and wants a more sustainable sort of rate of population growth. And the question here, in the context of, if you buy the view that there is a lot of spare capacity, a lot of spare infrastructure, does it make sense to be cautious when it comes to population growth? So that's my second question. The third view is on energy policy. So I've talked about the infrastructure policy, I've talked about the population policy, there is the energy policy. And this region, the GCC, and Qatar is part of that, is basically a major supplier of energy to the rest of the world. And again, there are two views here. There's one view that says, given the comparative advantage of the region, given the low cost of production of energy in the region, the region should fight for market share. It should produce as much as possible, especially as the world transitions towards cleaner energy, as it moves away from fossil fuel. It makes sense to gain market share, to produce as much as possible in the near term, because in the long term, energy prices are going to be lower, and the region is going to end up with stranded assets under the ground, stranded fossil fuel reserves under the ground. So that's view number one. Produce as much as possible now, gain as much market share as possible. The world is moving away from fossil fuel. Make the most out of it in the near term. There is a second view. And the second view is, the region has high market pricing power because it's a big producer of energy. And therefore, we should aim for higher prices, not higher market share. We should restrict supply in the short term so that we get higher prices that will help us fund our activities in the short term. And I think on this, Qatar is fairly clear. Ryan already mentioned the expansion in the LNG. There's been actually an upward revision to this. This is a picture from the Twitter account of my colleague, Steven Stapczynski. You have the picture of Qatar Energy, the recent announcement of further expansion of LNG production. Qatar is going to increase that by 85% by 2030. That's a significant increase in LNG capacity. So it's fairly clear when it comes to energy policy, Qatar is clearly targeting having market share, is not targeting higher prices. And that is interesting in a regional context. I think if you think about what is happening in the region, Qatar Energy's strategy seems similar to what ADNOC is doing in the UAE, which is it's increasing its output capacity when it comes to oil, not LNG in the case of Qatar. ADNOC is increasing its capacity of oil production. It wants to produce as much as possible now in order to avoid ending up with fossil fuel reserves that the world needs less in the future. And that contrasts with what Saudi Arabia is doing. It's doing two things. First is leading OPEC Plus to restrict its output to increase prices. And we've seen that strategy happening over the last 2 years. But also we've heard the recent announcement from Saudi Aramco that it will cancel its plans to increase production capacity. So it had previously plans to increase production capacity from 12 million barrels per day to 13 million barrels per day. These plans have been shelved. So you can see the contrast in the two energy strategies, and you can see where Qatar stands. Qatar is clearly going for market share, and it knows its comparative advantage in LNG, and it is going to fight for that. So the question is, again, for Ran, for Tim, for the audience, which strategy should Qatar pursue when it comes to its energy policy? Should it try to get market share, or should it target prices? The last question I have is on the diversification policy. So This is a graphic from the National Development Strategy, the latest one. And basically, it says these are the diversification clusters, diversification sectors that Qatar wants to target. So let's read them. It's manufacturing, it's logistics, it's tourism, it's IT and digital, and now we have AI. Obviously, is becoming, everyone wants to be in AI. It's financial services, education. That makes sense, but there's a problem that everyone in the GCC is targeting the same sectors. Everyone wants to have a financial center. If you look at logistics, it's a re-export hub. Everyone wants to be a re-export hub. It says air transport global position. Everyone wants to have a mega airport. Tourism, everyone's targeting tourism. The manufacturing side, it's basically moving away from producing crude oil and raw gas towards petrochemicals. Again, chemicals are mentioned here. And there is an issue here. The issue is, how many financial centers does the region need? Do you need one in Dubai, one in Abu Dhabi, one in Riyadh, one in Qatar, and one in Bahrain? I don't know. How many mega airports do you need? Do you really need the big one in Dubai and a big one in Saudi and a big one in Qatar? I'm not sure. Tourism. Again, are we fighting over, is the region fighting over the same number of tourists who are going to spend a week in this region, but probably distribute it among the 3 or 4 countries instead of going to one place? Again, there is a question here, and the question is, there are 2 questions here. The first one is, should there be a policy that targets certain sectors? And if there should be such a policy, what sectors should Qatar target, given what its neighbors are doing? Because you can't do this in isolation from your neighbors. So let me wrap up here by summary of the 4 questions that I have, and I'd really love the views from Ran, from Tim, who's a wonderful expert, but from the audience as well. The first one is on infrastructure policy. Has Qatar built too much? What can we learn from this? The second one, assuming that Qatar has built too much, does it make sense to be more restrained when it comes to population growth, or should Qatar go ahead and try and attract as many people as possible? The third question is related to energy policy. Should Qatar target increasing its market share in LNG, or should, even if it leads to lower LNG prices in the future? And the fourth one is on diversification policy. Should Qatar actually have a strategy in which it tries to target certain sectors, and if yes, what sectors it should target? Thank you very much, and I'll stop here.
Excellent. Thank you very much, Ziad. Some excellent questions, and I have to say, you've asked the questions, but I don't think I'm going to let you off by not asking you for the answers on some of your views on the answers on some of these questions, as well as Ran. So we have a few questions coming in online, which actually fit also quite nicely into some of the points Ziad has raised. So maybe what we could do is just start, and there's a question that's coming online in terms of how the LNG expansion and economic growth that will generate impact the green transition, both in Qatar, but also I think the global target of trying to limit warming of the planet. So I guess maybe framed a different way, the consistency of expanding LNG while claiming that you're supportive of the green transition and implementing policies domestically on those lines. So maybe Ram could start with you on that, and then come to Ziad for any answers to the question that he would like to, or views that he would like to provide.
Thank you, Tim, and thank you, Ziad, for the excellent set of questions. As Tim said, I would also very much appreciate your insights on these questions too. So, Tim, shall I go through Ziad's questions and then go to the question on the LNG, or should I start from the LNG question?
Yeah, let's just start on the LNG, and then I'll work some of the online questions into some of the other points as well. So
Sure. Okay, again, that's also an excellent question. Clearly, the LNG expansion will generate higher hydrocarbon sector growth for Qatar during the time horizon that the expansion will take place. In terms of the green transition, so I know there might be the perception that, you know, the more LNG that is produced, maybe it would delay the process for energy transition. But I just want to also highlight there's a balance between energy security and energy transition. Of course, I mean, climate changes, energy transition are very, very important. But let's also don't forget the episode when in 2022, when energy insecurity was a major concern, especially in Europe after the war in Ukraine started. So with that said, it's important to actually for the the commodity exporters to at least maintain the production to ensure the energy security aspect. Now, on whether further expansion is needed, I think there are several aspects. One, LNG or natural gas in general is the cleanest fossil fuel and cleaner than oil and coal. So from that perspective, many countries see it as sort of a transition step to change from the dirtier fossil fuel to natural gas. So from that perspective, if let's say if China or the major Asian countries, emerging markets that Qatar exports actually most of its LNG to, if these countries can transition from coal to LNG, as an intermediate step of green transition, that by itself would actually help with the emission reduction globally. So I think there is some positive from the climate perspective. There is some positive spillover from transition from dirtier to cleaner energy. So. And in terms of the, so I talked about the global sort of positive spillover, and I also want to mention that the EU actually classifies natural gas as a green energy. I mean, we can discuss about that, but it just is another, perception that LNG could be an intermediate transition energy. So that's on the global sort of positive spillover with more LNG supply. Now, domestically, Qatar is also doing quite a bit on the green transitions. Yes, it has been expanding LNG, but also a lot of efforts have been put into investing in renewables and also in carbon capture and so on to sort of reduce the emission from natural gas production. Let me not get into the technical aspects because I'm not an expert on all these technical details of how to reduce emission from LNG production. So I think domestically, there is quite some effort going on in terms of sort of reducing the emission from the LNG production. Yet another aspect actually also related maybe to the last question from Ziad is more sort of the diversification. Again, what is the growth model, right? Yes, on the one hand, you're trying to diversify the economy, but to expand the non-hydrocarbon sector. But on the other hand, the country may be expanding the hydrocarbon sector even faster. So to me, that is also a very important question. I mean, those are just like two key pillars of the economy. Both are quite important, but what is the sort of the balance between these two in terms of the growth model? Because ultimately, despite all the benefits being the cleanest fossil fuel, ultimately there will be the global transition to renewables. And then all these, I don't know what is exactly could be the time horizon of that, but given the massive reserves, natural gas reserves that Qatar has, it is, I guess, the time horizon it can rely on natural gas depends more on the global progress on energy transition rather than for how many years its reserves can last, which can be, I don't know, I don't have an exact number, but can be hundreds of years ahead. So those, from my perspective, are the key issues to think about. Thank you.
Thank you, Ran. Ziad, do you want to add anything?
Yeah, I lack in creativity. So I ask questions and I don't give answers. And second, I'm going to echo what Iran said. And actually, I'm going to echo the view of one of my colleagues, Javier Blas, who actually wrote an article at Bloomberg on the expansion of Qatar's LNG, which touches actually on the question. So basically, the idea is you can argue that the LNG expansion is a good step towards energy transition and movement towards cleaner sources of energy, because you can argue that the expansion or Qatar trying to flood the LNG market is not just an attempt to gain market share in the gas market, but also it's an attempt to gain market share in the global energy market, which includes other items, in particular coal. So if you think where Qatar exports its gas, exports it to Asia. What is another source of energy in Asia? Is coal. Why do they use coal? A, because it's available, and B, it's cheap. So by increasing LNG supply, by making it cheap, you're making it actually not only displacing other LNG producers around the world, but also displacing coal in some countries, and that could help towards the energy transition.
Um, Ziad and Ran, whether you have any views. So I think you mentioned, Ziad, that we're seeing a somewhat different strategy in the oil market from OPEC Plus, where supply has been restricted to keep the price up. Now, clearly, the gas market is structured very differently to the oil market. But what we are seeing is a lot of expansion in gas production from US, planned Qatar, Australia, and even now UAE. I think Saudi also talking more about the gas market. And if I'm correct, and please correct me if I'm wrong, that gas prices tend to be linked to oil prices as well. So I just wonder how this sort of dynamic of the oil and gas market may change going forward, given this huge expansion in production of gas at a time where oil is being restricted and the pricing structure between the two markets.
Sure. So I have a running hypothesis, and my running hypothesis is that at some point gas and oil prices would decouple. Currently, as we know, Qatar sells most of its gas through long-term contracts, and the pricing of these long-term contracts is linked to the oil price. But if you think that the world is going to transition and the demand is going to decouple, and you'll have what economists call preferred habitat when it comes to energy, right? So you prefer, within fossil fuel universe, you prefer gas. At some point, the demand is not going to be there's not going to be a uniform demand for also fossil fuel sources of energy. You're going to have more towards gas and oil. And if that happens, you may have a decoupling between the two. So I think this is a hypothesis. It hasn't happened yet. But if you're getting this expansion in gas supply, if you're getting a lot of demand for gas at the expense of oil, if you're getting these targets on carbon emission, you might see it happening.
Rand, you want to add anything here?
Yes, thank you, Tim, for the great question, and thank you, Ziad, for sharing your views. I would say at the spot market, we already observed some decoupling, especially in 2022 when the demand and supply for oil and gas were very different, right? You saw the gas price really spiked in 2022. So from my side, maybe I know I talked a lot about Qatar, but maybe if we step back and look at the global market supply and demand. On the supply side, as Tim mentioned, a number of countries have been expanding or plan to expand their natural gas production. So likely there will be more supply over the medium to longer term. But on the demand side, there could also be huge demand if indeed countries are transitioning from coal to gas. So that is actually one issue we're working on. I don't have a sort of a net assessment readily available, but that's definitely one issue that we are looking into as to how that supply and demand will affect medium to long-term gas price. Now, on a few points that Tim mentioned, because the gas market is very fragmented. It's not like the oil market where there's pretty much a global oil price benchmark. The gas market, mainly there are three main markets, right? And there's the European market, the US market, and Asian market. Let me focus on what Qatar focuses on, which I think around 80% of its exports are through long-term contracts indexed to oil price, as Tim said, and to the Asian market. And that's a reason why actually Qatar didn't benefit as much as one would imagine in 2022 while the very high spot market price. Because the long-term, I mean, there's some flexibility in the long-term contract to increase the price based on the formula, but not entirely moving in line with the spot market price. So I think it's quite different from the oil market, also from the perspective that there's OPEC plus for the oil market. So in a way, there's a cartel to sort of have some influence on the price. For the gas market, exactly because it's so fragmented globally, it would be quite, I imagine, could be quite difficult to really have some coordinated efforts to affect the gas price. So I think, yeah. And in terms, maybe going back a little bit to Ziad's question on the different strategies for the market share or higher prices, I think I mentioned about the prices. I don't think the market power for the gas price for Qatar would be that high to the extent that it could really impact the price that much. In terms of the market share, I mean, of course, Qatar is among the lowest cost producers, so it will be among the last one standing. So I think that's more or less people understand. But I also want to highlight there are other reasons why, other sort of advantages that Qatar has. So for example, it has a very, very, very good track record of being a reliable supplier of LNG and all that, and the whole related infrastructure needed for the LNG, because it's quite a process, right, to liquefy and so on. So given all these years investment, expertise, know-how in this industry, I think Qatar has quite some comparative advantages there. But with that speaking, clearly competition is rising in terms of gas supply. Thank you.
Thank you. I want to turn and try and actually pull two themes of some of the questions online and Ziad's questions together. So, Ran, one of the striking charts in the staff report was the total factor productivity performance of Qatar, which, you know, across the GCC, total factor productivity has not been not performed very well over the last 10, 15 years in particular. So basically, I guess the inputs of labor and capital are not very efficiently being turned into output. And I think what came up in both your presentation and Ziad's comments is there's been this huge amount of investment going in for various reasons, and questions of is it too much investment? And then we've also seen rapid population growth over an extended period, and then questions about what should the population strategy be going forward. And I think at the end, if you think that productivity growth is ultimately going to be the determinant of sort of sustained growth, particularly in the non-oil economy, you've really got to I guess I think probably reduce the amount of investment, make it more efficient, as you said. Questions about sort of transitioning to maybe higher skilled expatriates, workers to boost that productivity. So I guess the question amongst all of these reforms, what are the keys that you see in terms of boosting productivity growth going forward, and where do you see things already happening, and what more should they particularly be focusing on here?
Thank you, Tim. Indeed. I mean, as you said, TFP has been on a declining trend for GCC, but Qatar is even sort of on a faster declining trend. So let me point out a few things. Qatar actually has managed to made quite some progress in economic diversification. 2/3 of the total output is now from the non-hydrocarbon sector. However, if we look at the increase in the non-hydrocarbon sector, construction has played a key role in sort of increasing diversification. Not surprisingly, given all the infrastructure investment and so on. But if you think about the labor productivity, the skill levels needed for the construction sector, clearly it's among the lower skilled sort of labor. So that partly explains the sort of the declining total factor productivity. And also, we often look at economic complexity index to get a sense of how sophisticated the country's output is, products or exports are. And if we, in our also published selected issues paper, there's one on structural reforms with a chart on economic complexity index, and Qatar, actually, among the GCC, Qatar is sort of on the lower end, not only not improving. I think Saudi Arabia is a more successful case in terms of increasing economic complexity over time, but Qatar is sort of actually declining in terms of the complexity. So all these are gaps that we mentioned in the staff report, but I think also recognized in the latest national development strategy. So the goal there really is to build a knowledge-based, a more technology-intensive economy going forward. And for that, clearly, we maybe just also going back a little bit on the population question. To me, the issue is not just on how fast the population should grow. I think it's more because the majority of the population is basically expatriate workers. So really the skill composition of the expatriate workers. So if Qatar is able to diversify into higher value added, more sophisticated industries, and if Qatar is successful in attracting talent into those industries, then that population growth from that success would be much more beneficial than just expanding population, but then again by investing more in infrastructure and so on with a lower skilled labor. So I think for the population growth question, I don't think there's the right rate or wrong rate. I think it's really the composition. I talked about the skill level, and as to whether there's too much infrastructure built, again, unfortunately, my answer is always, it really depends. It's really hard to say yes or no. I think to what extent we can have higher productivity from the infrastructure, it really depends on how it is used. So if you think about the infrastructure built, right, for the stadiums, I think Qatar has already been very active in hosting events, sport events, and so on. But for the other things, for example, the port, then that could potentially help to boost with the right, operational and relevant skills can help boost logistics and so on. So again, it's a lot of infrastructure, but ultimately what kind of productivity can be generated from that infrastructure depends on how they're used. So maybe on Tim's question of where we already see some progress and where more needs to be done, we have already seen quite some progress, especially on improving business environment, lots of recent initiatives in attracting FDI, promoting PPP, basically to promote a private investment, private sector involvement has been happening. And Qatar really ranks very high on GovTech, for example, is the indicator to measure the digital government services and government efficiency is very high. I think a lot of progress has already been made on that. On the labor market, I think that's where more efforts are needed. The reform to abolish the kafala system is very welcome, but that one, first of all, should be implemented continue to be implemented. And secondly, I think that reform focuses a little bit more on the protection for the lower skilled labor. So now the question is, how do you attract the higher skilled talent that you want? So for example, reforms like expanding the pension scheme, maybe strengthening social safety net and all these. And also, I mean, you need an enabling environment for those high-tech industries to establish in Qatar in order for the relevant talent to come in. If those companies are not in place, then it would be very difficult to really attract those high-skilled population to come in. And that's why I also highlighted digitalization. And of course, as Ziad said, the AI would be a major area that could help in that regard.
Maybe Ziad, I can come to you with a question we've got online. And it's sort of that you highlighted the differing strategies between Saudi Arabia and Qatar. Could you elaborate a bit on the positions of other GCC countries regarding topics such as infrastructure policy, population, energy policy, and diversification? And maybe I can throw in there, and take what parts you want of this. The question of FDI, which everybody has a policy on attracting FDI, high skilled expatriate workers, which is a similar thing, and maybe you could just make some additional comments around these similar sort of, I guess, economic strategies going forward. Thanks.
Sure. Thank you, Tim, and thank you for the question. So I think you do have similar problems in the GCC. Sometimes similar answers, sometimes slightly different. So on infrastructure, I think there is a lot of infrastructure building in the GCC. It's definitely improving significantly across the board, but there is a risk, and again, across the board, of excess capacity. And that's something to watch. Qatar is one example, but that's not the only place now or even in the future. In terms of population policy, I think where you have the common is that all the GCC, not all, but at least the ones that we speak about, Saudi Arabia and UAE and Qatar, they want to attract high-skilled expatriates. But there's also difference in terms of the magnitude of growth. On energy, I highlighted the differences where Qatar and the UAE are going for market share. Saudi is trying to get prices, even if that means a loss of market share. And on the diversification policy, I think this is where it's most common because everyone is going for the same sectors. And that makes sense because the structure of the economies are different. I think if we take a step back and we think about what drives growth and what drives, the starting point is that this is a wealthy region to begin with. And it's wealthy because of hydrocarbons, largely. So the question is, how do you generate growth? And I think there are three sort of layers to this. There's the first layer, which is basically have a comparative advantage in producing hydrocarbons. The cost of production is so low that you could just produce a lot. And if you expand your hydrocarbon production, that generates growth and that generates wealth. And that has happened across the GCC. The second stage is once you've hit your limit or your capacity, or that there's what satisfies global demand, is you go to the next phase of growth. You start using your hydrocarbon wealth to build infrastructure, to increase the capital sort of stock of the country. And with that increases population. You get the combination of high population growth and large investment spending that generates growth. Obviously, that has as a byproduct, a lot of the time you can't do productivity. And this is why the total factor productivity across the GCC is low or even is negative, is growing negatively. But that's sort of also easy level growth because you take your hydrocarbon wealth and you start investing heavily in infrastructure. But once you've built your infrastructure, and you can't build too much of that, once you've upgraded your airport and port and your public transportation and your metro and your road network, what do you do next? You need to go to productivity-led growth, which is what Tim's question is about. And what are the key areas? So I think rather than targeting sectors, and I'm going to answer my fourth question now, rather than targeting particular sectors, I think it's more useful to target sort of the environment. And I think there are two particular areas that Ryan mentioned and Tim mentioned and everyone knows about, where if you target them, if you start doing stuff on them, that would lead to the highest benefits in terms of productivity growth. The first one is the labor market. The labor market is quite restrictive in the GCC. Opening it up, making it better and more open is definitely one element that will help boost productivity. And yes, there's been a kafala reform in Qatar. There's been other stuff across the GCC that is useful. Is it useful? For sure. Is it enough? Not. No, it's not. And the second area is the product market. It needs to be more competitive. You need to basically get rid of local monopolies. You need to allow more foreign ownership. To your question, Tim, about foreign direct investment, you need to allow higher percentage of foreign ownership in this market. If you make it more productive, if you make it more competitive, if it can compete domestically, it would probably be able to compete abroad. And that's how you raise your exports, and that's how you make the economy more diversified.
Thank you, Ziad. And come back to Ran with a question online about VAT implementation, but I want to put it more broadly in terms of the fiscal advice. So the question is, VAT implementation will impact new investors looking to invest in Qatar. But let me ask more broadly, Ran, the impression from the report, and rightly, is that the fiscal position in Qatar is strong. Surpluses looks good from a medium to long-term perspective. Yet the advice in the report, it seems to be largely in terms of reducing spending and raising revenue. So maybe you could explain a little bit more the context of why, given the current strong position on the fiscal side, the IMF is still arguing for measures that seem on face value to further strengthen it going forward. And then maybe also, what impact you think the VAT would have on the domestic economy if introduced.
Okay, sure. Thank you, Tim. So maybe let me start from the broader fiscal question. Indeed, as I also mentioned in my presentation, the fiscal prudence, fiscal discipline over the past few years, it has been very welcome, and we also welcome the intention going forward to maintain that discipline. On the question as to why we still sort of suggest in that direction, given the very strong position, I think there are several reasons. I would say maybe the main uncertainty and risk and potential volatility comes from the hydrocarbon prices during the global energy transition. That is a highly uncertain process. In the staff report, we actually have a chart showing different scenarios of hydrocarbon prices depending on whether the global energy transition will be driven by reduced demand or whether it will be driven by reduced supply. If everybody stops producing hydrocarbon and try to invest more in renewables, then there could be the energy security issue that I mentioned earlier, that there could be a supply constraint. In the supply constraint scenario, then the price would be so much higher. While if the transition is driven by much lower demand, of course, the hydrocarbon prices would be much lower. So that really matters a lot for all these hydrocarbon exporters, right? Because the price trajectory would determine the total sort of national wealth, because natural resources is a big part of the national wealth. And of course, there can be uncertainties from other aspects. For example, Qatar has the Sovereign Wealth Fund, Qatar Investment Authority, which mostly invests abroad and have financial returns, but global financial conditions can fluctuate. So there can be volatility from there as well. And thirdly, there's the population growth that we discussed earlier. Again, we don't know what would be the optimal population growth, but assuming that the population will grow at a certain rate, then in order to ensure future generations enjoy the same level of income, the same level of prosperity as the current generation, then you have to be prepared for that future. That's why in our work, we usually use a benchmark, which is essentially to ensure intergenerational equity. We use that benchmark to assess whether the fiscal position is sufficiently strong or not. So our latest assessment is yes, as of the latest data, 2022, 2023, Qatar is in a very strong position. Going forward, it depends on whether Qatar can maintain its fiscal discipline and basically stick to more or less that benchmark going forward. So I think that's what we are calling for. We are not necessarily calling for additional sort of consolidation, austerity, but more to say, please sustain the fiscal discipline, stick to that indicative benchmark, because that benchmark itself hinges on the assumption on oil price or gas price going forward, right? So adjust or update to a benchmark with the realistic price assumptions, depending on how global energy transition will evolve, and then try to keep discipline to stick to that, to that benchmark. So let me stop here. I hope I answered your question, Tim.
Yeah. Ziad, do you want to add anything to that?
No, we can move on to the next question. I think Ran covered it very nicely.
Very good. Okay, so we're beginning to push against the time we said this was finished, but there are a couple of, I think, good questions still online. So I'm going to ask maybe both of them together and then ask Ziad and Ran to choose what they want to respond to, one, both, neither, maybe not an acceptable response, but and then also to make any other concluding remarks they want. So one question is how the development and reforms in Saudi Arabia are affecting the growth and attractiveness of Qatar. And linked to that, there's also a question about sort of whether expanding middle class in Saudi is boosting tourism in Qatar. So that's one set of questions, the Saudi Arabia-Qatar relationship. The other question is on the financial sector and asking how the country should open up its banking sector for international exposures and not rely so much on government funds to sustain the profitability of the banks. So those two on the table. Maybe Ziad, I'll come to you first, and then we'll conclude with Ran. Thank you.
Okay. I'll get to choose. Excellent. I'll pick the first one because I did mention quite a bit when talking about the diversification policy, the sort of the crowding, the GCCs all crowding around the same sectors. And maybe, yeah, I do believe that is actually right. But I think there's also a benefit in what's going on. If the GCC grows, obviously there is. If you take the GCC as a whole, as it gets richer, domestic demand will grow, and that doesn't stay in the one country. It spills over through tourism, and spills over through other forms of activity. But I'll add one more thing because we talked a lot about attracting expatriates, and white-collar expatriates and high-skilled workers, and I think if you get there's a crowding effect, but there's also a network effect that we have to actually think about. And the network effect is this: if people all of a sudden start moving to Dubai and Abu Dhabi and Saudi and Doha and Riyadh, it actually creates a network, right? So, if you have your friends in the UK and in the US, they come to the region, and the regions all has high, world-class infrastructure, easier labor market regulations, nice living standards. I know the IMF wants to lift taxes, but even after if this region listens to the IMF's recommendations on introducing VAT in the case of Qatar or lifting in other places or introducing a new set of taxes, it's still a low tax environment compared to other parts of the world. As more people come to the region, it becomes less mysterious and it becomes more attractive. And yes, people may find, I don't know, Dubai expensive. They decide to live in Abu Dhabi, or they find Riyadh is too inland, so they move to Doha, so they'd be by the sea. But it creates that sort of network effect. So as the region lifts and as these countries become richer and more attractive and more people start going there, become less mysterious. And there's a network effect of high-skilled individuals in other countries who would be attracted not just by what's going on there, but also by the fact that their colleagues and the companies that they work in are setting up shops in the region. I never end on an optimistic note. This one is for you, Tim.
Good. So, Ran, over to you for last words. Hopefully, you can cover the financial sector question. Any thoughts on the spillovers from Saudi to Qatar, and then any final remarks you want to make. Thank you.
Sure. So maybe let me very quickly just complement what Ziad just said on the spillover within the region, Saudi, Qatar sort of spillovers. I just want to point out to one of the early charts I showed in my presentation that tourist arrivals. I know I didn't put it on screen for very long, but if you look at the source countries of those visitors, you would see the increase post World Cup in visitors. Actually, from within the GCC, that is the main contributor to the very strong tourist arrival in Qatar. So that is just one early evidence to show that there is spillover within the region, as Ziad said, and there's much scope for regional integration on trade, and not only on goods, but also on services like tourism, transportation, and also, of course, financial integration. So overall, yes, there could be some competition like on LNG supply and so on, but also I see a lot of scope, as Ziad said, on the network effect, on the potential gains from further regional integration. So that's quickly on that. On the financial sector, indeed, there is quite a large state footprint in the financial sector on both asset side and the funding side. Especially in preparation for the World Cup, a lot of the loans were extended to SOEs for relevant infrastructure constructions and so on. And of course, a large source of the funding might be from the hydrocarbon liquidity. Now the situation has changed because of the completion of the World Cup. So there's less demand from the public sector in general for loans, for credit. And that should help to reduce the crowding out of credit to the private sector. Now on the funding side, it's also very interesting. The banking, even though, yes, public sector deposits is a large part of the funding, on the other hand, the banks are quite exposed to foreign funding as well. This makes sense if you think about the episode when the global financial conditions were really loose after the GFC, before the current tightening cycle. There was a long time when external funding cost was low, and the tenor tends to be longer than domestic funding, which is mostly deposits. And we heard that is usually short-term deposits. So that's why banks are quite exposed to foreign funding. That's one area we flagged as a potential pocket of vulnerability. And the Qatar Central Bank has been taking steps, actually with some effect already seen, to contain the bank's exposure to foreign funding, especially of the short-term maturity. But then the question is, if there's limited funding from the government and we're also limiting the funding from abroad, then how should the banks get funding in order to, supply the credit needed for economic growth going forward? Then the answer would be on domestic financial market deepening. And that's another, I know I didn't get a chance to talk about it in the presentation, but that's also a key policy advice in our staff report. And to that end, I also want to point out the central bank has recently launched a financial sector strategy where financial market deepening is a key pillar. So again, that's welcome. But I think all these visions, strategies need to be underpinned by clear action plans. So if I may, that could be my final remarks. I think at a high level, there are lots of welcome policy initiatives in the right direction. So we are very happy to see them. But I think it would be really important also for us, for the world, to see the clear action plans, how those ambitious and welcome targets can be achieved. I think that's pretty much the case for all the reform areas that we want to see. Let me stop here. Thank you.
Very good. So let me then wrap up and just again thank Ran and Ziad for a really excellent discussion. I have to say I didn't know too much about Qatar coming in, and I feel I myself have learned a lot in the last hour and 20 minutes. So very informative. Let me thank everybody who joined us online, and also I thought an excellent set of questions that came in online. So thank you for that. And we look forward to hosting another event on GCC economics at AGSIW in the hopefully not too distant future. So thank you again very much and enjoy the rest of your day.